What's up, YouTube? It's your girl Romy checking in. I hope everyone had a great holiday. Wanted to talk about the yellow brick road leading to Apple. I also wanted to discuss a few consumer discretionary names. And without further ado, let's get into it. First off, let me do a little housekeeping. I'm not a financial advisor and this is not financial advice. If you like the video, give it a thumbs up. If this is your first time here, welcome. Don't forget to hit subscribe so you can be alerted to whenever I post. Also, I provided a link at the bottom so that you can avail yourself to some free stocks. Now, how about that Apple trade, huh? That was awesome. It was on fire. It hit the levels that we wanted to buy in. Congrats if you caught that dip. It was like right on the money, give or take 20 cents. If you got in, fantastic. Just ride the wave into ER. Also, they revealed some exciting news about their EV play, or whatever they're doing in the EV space. So that's very exciting news. Definitely tailwinds for Apple, right? So back to the financial analyst target, which was $150, which I said was completely conservative. But again, stick with it. My price target for the end of 2021 again is $180. Do I see Apple hitting $200? Absolutely, especially by 2025, when they're really supposed to be rearing their head into this EV space. But once again, fantastic move by Apple. If you didn't catch the dip at 126 and change, that was rough. However, do I see it pulling back to those levels? Not a fortune teller, but that's strong support. But the last resistance level now will serve as support. So the last resistance level was around 128 and change, 128.60. So try to get in, scale in at that level, and maybe, just maybe, it might pull back to that 126 level, and that for me would be a strong buy. But other than that, right now, I don't know. I really don't know. We're at about 131 and change. I don't know. People were rebalancing their portfolios. People took some off the top, and yet Apple stayed strong throughout. So good luck. All right. Why am I setting my sights on the consumer discretionary trade? Well, it's all about the reopening trade, and we're gearing up to reopen. So these beaten down stocks, they're gonna have their day in the sun, and I want to be with it. So the two stocks that I've set my sights on are TJX and GM. So TJX is Marshall's Home Goods and TJ Maxx all together. Now, I don't know about you, but I never know which one I'm entering, so I just call it TJ Marshalls. I don't know if I'm entering Marshall's, Home Goods, and or TJ Maxx, so I just call it TJ Marshalls. Whatever the case may be, it's all good. I always find something that I didn't even need or want. Right now it's currently trading at $66.98. I've drawn a few support lines, a lot of them as a matter of fact, and resistance at 67.48. And if this should break resistance and be at a high by the time ER comes around, don't be surprised if it trades sideways or if it pulls back, because I don't see them beating ER, but they may have a good earnings call by guiding higher because we have the COVID vaccine and we're reopening everywhere. So the resistance lines that I've drawn in are 66.64, 66.35, which are real narrow dips and trading ranges. But again, it might fall to these levels. Another one of 65.28, 63.70, and the low of 61.88. I would call 61.88 a strong buy. However, if you can catch it at 65.28, 66.35 within that trading range, and then get in at 63.70 and finally get your last bits at 61.88, you're good to go. But I don't see this being a trade from now until the end of March. So again, this is looking into the future, right? We don't know what any company is going to report come February, but we're going to get a slew of earnings this coming February. And this is a reopening trade. So again, I don't see them beating earnings, but they might forecast high, right? And that might be a tailwind as opposed to a headwind, right? So that's something I want to look into TJX as a core position moving forward. The other one is a name that I'm sure everyone of you know. It's GM, which stands for General Motors. Again, since we're leaning into the hardcore recovery trade, we got to think that people are going to be out and about driving their cars. GM cut their dividend, but they're looking to reinstate it in 2021. So with every dip, I've been just stockpiling GM stock in another account. And I have to say, I believe that GM is completely underpriced and undervalued. So for that reason, I'm putting it on my watch list, and once it stays above the 50-day moving average, which is also known as 10-week moving average, it should be smooth sailing. I like where it's trading at now at 41.58. However, I do like it better at the $40 range or $39.80 range if you can catch it that low. But once it stays above the 200-day moving average and bounces off of that 50-day moving average, it's a strong buy because it's a strong level of support. Just check out the support levels that have drawn in there for you. And that's pretty much it. Again, solid Apple rocking movements, right? I'm just so happy. I'm so ecstatic about that Apple move. You just don't even understand. I'll do some follow-up on Apple at the end of the week. Also, we'll be checking back in to check these consumer discretionary names and some other names and sectors and areas. And also, if you wanted to play the if you wanted to play the consumer discretionary names, you could also just invest in an ETF, and that basically compiles all the best consumer discretionary names in one. And the ticker for consumer discretionary ETF is XLY, and we'll go over the support and resistance levels for that in the coming days. Happy trading. I hope this was informative. If you liked the video, give it a thumbs up. First time here, again, welcome. Don't forget to hit that subscribe button. Also, avail yourselves to some free stocks with the link I provided on the bottom. So until next time, if they ask you, why is it so easy? Tell them Romy taught me. Take care, you too.